Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's March 19th. Hope you guys are having a great morning so far today. Let's jump right into it. We got a few items here to go over. We'll start off with the weekly jobless claims that we get every Thursday here. And today's data will actually be important primarily because this will be the sample week that is the data that they'll be used as part of their calculations for the March job numbers coming the first Friday of April. And so as you can see here, we had pretty low numbers there for a long time here at 211,000 the previous week, 211,000. Forecast was supposed to be a slight uptick to 220, and it well exceeded that by 70,000 people to 281,000. Now, of course, this is probably just the prelude of what to expect ahead. Now that this is something that's, full effects of the coronavirus of what we're seeing in our economy as businesses are starting to close due to uh, perhaps prolonged closures. We don't know. Business has been real slow, so we're seeing a lot of stores cutting hours and even closing as a result of it. So as a result, you're going to probably see a few people applying for unemployment. Probably not really a few, but quite a bit. But just to give a heads up, this is kind of like probably the beginning of what we'll begin to see here in the near future here. So be prepared. Uh, Last but not least, we got the Philly Fed Index. This is manufacturing in the Philadelphia region. We had a great month in February at 36.7. Forecast is supposed to still show 8.0, at least some capacity, but unfortunately in March it just completely tanked. So we're starting to see also manufacturing being affected by this. So anything in negative territory is contraction on this type of index. Anything above is positive or some type of expansion. So we had some expansion in February, but however we kind of hit that wall in March with the coronavirus now taking more escalating as we speak, and still probably haven't hit the height of it yet. I think they're expecting that probably sometime in April when we'll probably hit the height of the pandemic. So let's kind of move on here, see how this is affecting the bond rates. I'm sorry, the headline news. We'll go with the headline news first. Stocks are heading down right now. I think Nasdaq might be still in positive territory. I did see all three indexes in positive territory, but as I've kept reading, I see declines in both the S&P and the Dow were going down in negative territory. But Nasdaq could potentially stay in positive territory, or maybe it might dip in negative territory, like its other counterparts right there. Something that's happened today, earlier, or actually before stock open, the Fed opened up a temporary dollar swap lines with central banks so they can meet global demands for dollars. So this is trying to create some cash and liquidity out there that dollar seems to be is the denomination that uh, global most used global currencies. So they're trying to create a temporary dollar swap line so that with the central banks, so that way they can meet any demands for the dollars. Yesterday, late in the day, they opened up a money market mutual fund liquidity center. So MMFLF, I guess they're calling it, to facilitate money market funds to meet demands of redemption. So when you get the consumers or you got private investors or uh, these people trying to redeem their mutual funds, they have at least the capacity to meet those demands. So they're trying to set up different things for a run on the market, and obviously we're seeing a pretty big drain on the stock market as of late. Let's kind of see how this is playing out in the bond market. We were getting some huge swings, as you can see here. We had a decent day. We were even up about 30 basis points, and then next thing you know, it just completely dropped. We lost about 194 basis points, which is almost 2 points in pricing. Today we were actually down about 25, testing off the 100-day moving average. We were even up about 90, just over 100 basis points, and then we kind of pulled back so far this morning. So it's just a lot of seesaw action here. We're testing the 25, the 50-day. Now we're just hopefully staying above this floor of support right now, and up currently about 41 basis points. So again, stock or mortgage-backed securities are pretty drained. We're getting a lot of price changes, and it's hard to even lock rates at this point due to the constant price changes and the big swings in the markets. It could drop 20, 40, 50, even 100 points in just a matter of minutes, and just the secondary markets are having a hard time keeping up with these big swings here, knowing which way to go. If they're, like I said, we were like here, we were up about 30 basis points. Next, it just completely dropped. Today, we were down 25, then we went up about 100, and now we're up about 41 basis points. So again, tough drops for those who are in the secondary markets trying to get rates up, but with the constant changes, it makes it difficult for anyone to get in there to lock rates if they're happy with those rates and to uh, play it up. So, anyways, I just want to give you guys an illustration of what we're seeing here. Yields are down a little bit. They're down, testing the line here at the 1.087. We're currently about 1.09 right now, and this is our next floor of support. So again, yields are down as well. All right, so rates are probably a little bit better than what we saw yesterday, but again, it's just going up and down so much that it's really hard to kind of manage where the rates are at. We're also getting a situation where Stephen Mnuchin made a comment about if we don't take these measures with the stimulus, that we could have unemployment could jump up 20%. So that got creditors were concerned that they might have to start pricing in risks involved with possible defaults on mortgages and stuff. So we may even see a spike in rates due to comments like that may have them a little anxious and building in a little bit extra risk involved for mortgage-backed securities. So pricing might be a little bit higher compared to what we would normally see. All right, so that's pretty much the wrap. If you guys are in California looking to buy or refinance, I'd love to be able to help you guys out. We are a lender, and the best way to reach me is direct message me or email me. We can certainly help you out. And again, email is probably the quickest turnaround time. So look forward to hearing from you guys. You guys have a great rest of your day, and we'll look forward to see you guys in tomorrow's video. Bye-bye.